What's going on, everybody? This is Travis Witherspoon from Untitled Chapter. This is another episode of Trade with Travis. I have 4:04 p.m. on Sunday evening. I hope everybody's doing very well. This is my first time actually being able to talk to everybody in a while. A lot of stuff's been going on life-wise, and quite frankly, my Sundays and everything else have been taken away because of like school and stuff like that, trying to get prepared students for finals and all other stuff. So I'm super excited to be able to talk to everyone again and being able to get through it. And I promise you that you're going to end up seeing my face more often along being on this platform and being able to talk through trades and everything else like that with our boot camps and master classes and automation systems and everything else like that. So without any further ado, if you're not familiar with what I end up doing, I end up taking a look at Forex pairs, indice pairs. I end up taking a look at gold. I end up taking a look at some Bitcoin and stuff like that to be able to figure out trading opportunities. Typically, Sunday is one of those days where we end up doing a game plan type of deal. And then after that, typically throughout the week in which we're going to end up increasing those times as well. Throughout the overall week, we're going to end up going through and doing a lot of live trading. So today is typically one of those days where you have a game plan, you kind of figure out what's actually happening, then after that, be able to make a move if the market actually ends up giving you an overall game plan. But without that being said, let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that forex trading involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it is not promised that you're going to end up making money today. So with that being said, what I'm going to end up doing is that we're going to end up talking about what we end up taking to make us take a trade. As always, if you want to take a look at that, all you got to do is the biggest thing is be able to take a look at this slide, and we end up going through that. My non-negotiable rules are very simple. I end up taking a look at trending markets only, meaning that we have a market that has direction. And then from that market that has direction, we end up taking a look at R2 or R3 rankings. If you're familiar with that, if you've been into any one of our boot camps or free webinars or anything else like that, if not, you can go to cartercowcapital.com/start here and be able to sign up for one. We end up talking about the overall ranking system. Then after that, we got to be able to have time frame alignment, meaning that the weekly and the daily are trading in the same direction. If that does happen, then after that, we move to the next step, which is being able to find an overbought or oversold stochastic that match up with that time frame alignment. And if it does match up with that, then after that, we can go and find and see if there's some type of catalyst that equals a counter trend line break or some type of economic news. And then after that, lastly, is always equity management. Now, equity management is our risk versus reward system. Typically, when I end up taking a trade, I always want to be able to risk 1 to 2.3, meaning that for every $100 that I'm going to risk, I want to be able to make $230 off of. Treat it like a business, we end up being like a business at all points in time. So with that being said, let's go ahead and take a look and see what's happening with the economic calendar for this upcoming week. We will get into Wednesday. Remember, we typically meet Sundays and Wednesdays, so I'm going to take a look at what's happening from Monday all the way until Wednesday, and then after that, we'll kind of go from there. So this is the middle of the week, or basically the third week of this overall month. Typically, remember the first week and the third week of the month is always heavy with a lot of high impact news. So we take a look at what's going to end up happening on today. For Sunday, there's no high impact news at all. You take a look at Monday, you're going to end up having RBA meeting minutes and policy hearings from the pound and the Australian dollar, respectively. On Tuesday, you're going to end up seeing climate count change and unemployment rate, which is basically like our non-farm payroll in the United States. For the pound, you're going to see GDP for the Eurozone. You're going to see retail sales for the United States dollar. And then after that, you're going to end up hearing Chair Powell end up speaking. Remember, anytime that Jerome Powell ends up speaking, then the United States dollar moves. Whether if it's good or if it's bad, he's going to end up saying something throughout the overall day, which is going to end up being at 2 o'clock Eastern Standard Time. And more than likely, what he's probably going to end up saying is probably going to end up moving the market. Going into Wednesday, what we end up having is we're going to end up having another fundamental stay. So on Tuesday and on Wednesday, we're going to have two fundamental stays that are going to end up being back to back. So if you end up paying attention to that, that means that between those currencies, you're going to end up seeing a lot of news that's going to end up affecting the overall movement of the market. So that may end up pushing you to your overall take profit earlier, or may end up pushing it back a little bit depending on what direction you end up choosing. So with that being said, we always go take a look at the big three first. And because this is the first time that we've talked in a while, what I'm actually going to end up doing is I'm going to clear off all these charts and actually start from the beginning with everything. With most of these charts, so I can kind of be able to get a better understanding about what's happening, and for the people that have been working with me can be able to see it, especially legitimately from the beginning. So going to clear the screen a little bit. We always start off with the weekly, and then after that move on to the daily. So we take a look at the weekly. we're going to focus in on this movement right in here inside of this box. Obviously, we can see that this market has been going through consolidation since 2014. However, you end up focusing in on when this market actually ends up breaking out to the upside. You can clearly see that we're clearly past that break of that 12,000 area. Now we're clearly starting to move into new territory overall. So from this weekly standpoint, here goes our fractal low. We're going to end up taking a look at this and popping that in. And currently right now, we have completed the D extension on the overall weekly. The D extension on the weekly was at 12,661. If you look at it, and the market is in the sell zone for the weekly. And more than likely, what you'll probably end up seeing is the market is probably going to end up being very close to the sell zone off the daily. So we're going to end up looking at something called a transition trade that may end up happening in the near future. Now, what a transition trade is, if you're kind of familiar or if you're unfamiliar with it, is that typically you end up having, when you end up having time frame alignment, sometimes you don't have a stochastic basically aligning in the same direction. In this case, you have the overall movement of a D extension basically complete, and then you have a movement of a D extension basically creating based off of a daily as well, and you have them both being overbought, which means that you're probably going to end up seeing more people stop looking at buying and the market's going to slow down and you're going to end up seeing a U-turn. Well, if you get into that U-turn fast enough when it comes down to this movement, then that means that you have time on your side, meaning that the market going from the sell zone to the buy zone is going to end up taking you about 7 to 11 candlesticks. It's going to be the same thing when it comes down to the daily. So that'd be 7 to 11 days when it comes down to daily movement. And you're talking about almost 2 to 3 months of overall movement when it comes down to the weekly. So that allows you to be able to put yourself into a better position overall if you're looking at being able to short this, if this market starts to have a little bit of a retracement. So there goes your A, there goes your B, there goes your C, here's your D extension. We do not have a fractal high yet because we do not have 2 candlesticks to the right that are lower than this middle candlestick. So we don't necessarily have a move, but we do know something is brewing up and it may end up happening in the near future. So we take a look at this from a daily perspective. We can see that the market has not completed the D extension yet, or the new D extension at 13,168. But we do know when the market ended up retracing and making its B movement, it only went down to the 236 of 12,624. What that means to me is we have an 80-20 rule that's about to start happening, meaning that I do expect that this market may end up continuing to starting to push up because you notice we're not in the sell zone yet when it comes down to the daily. We're still in the no trade zone overall. That means that this market could possibly push up to 12,945 before you start to see a lot more people start to be able to sell just based off of Fibonacci rules and just based off of the 80-20 rule in particular. You're not familiar with the 80-20 rule, but just make sure that you end up popping in and going to my YouTube page and different pages like that where we talk about this a lot. And especially in all of our boot camps. So there's no counter trend line break for us being able to make this market move, but I'm not interested in being able to buy. The reason why I'm not interested in being able to buy is because the weekly D extension is basically being created. And because the weekly D extension has been created and because it's a higher time frame, I do expect that there's going to end up being some type of U-turn that's going to end up happening in the near future. And I think that U-turn will end up happening and starting to push down for a very long time. So the question is, what is going to end up being that catalyst? Is it going to be Jerome Powell saying something that's going to end up affecting the overall market on Tuesday that's going to end up starting to be able to make that downside movement? Or is it going to end up being something like GDP? Or is it going to end up being something like retail sales that's going to end up making this market start to be able to slow down? I don't know that answer yet, but I do expect that the market is going to end up falling down. And because of that, I'm not interested in being able to make a buy trade, even though the weekly and the daily are pushing up to the upside. So I'm going to sit on the side. Sit on the sidelines when it comes down to the United States dollar, which means I'm going to sit on the sidelines when it comes down to all United States base pairs because they're all showing the same thing based off of what I'm looking at when it comes down to the index. Type in a wire yes if that makes sense for the people that are watching this live. If it does not make sense and you have a question, you can be able to type in, or you can be able to type in your question as well as we go through this. So United States dollar index, not interested in being able to make a move. Take a look at oil. As we end up taking a look at oil, I'm going to end up doing the same thing. I'm going to end up clearing this chart off and starting again from the beginning. It's always good to be able to have new beginnings, and it's always good to be able to place in a chart and actually clean it up a little bit so you can kind of get a little bit more information. But remember, this market fell all the way down back when the pandemic started, all the way to negative amounts when it came down to oil. And if anybody ended up getting in on this one, quite frankly, and stayed in it, you are one, very patient, but two, Obviously there was a big run that ended up happening, and it kind of catapulted when the war in Ukraine actually ended up starting. And they ended up getting all the way up to 129.41 a barrel when it came down to the weekly. So we take a look at that and kind of see what is happening. I ended up speaking on this. I want to say the last time that we ended up talking, that I expected that this market was really going to start pushing up, and we're going to see oil prices actually start to be able to make a move to the upside because we finally end up getting that retracement. Well, based off of this, let's talk about the ABCD swing, and let's talk about the fractal low that was created and why I think that the market is going to continue to be moving up to the upside, and you're probably going to end up seeing oil prices keep on going up. So there goes your A, there goes your B, there goes your C. Market fell all the way down to the 5-0 position. Red goes to red. That means that there's an expectation that I believe that oil in the near future is going to end up getting all the way up to $171 a barrel, which means that for people that have gasoline, it's going to end up really affecting a lot of people when it comes down to that price. Now, does that mean that it's going to happen overnight? No. It just means that in weeks, months, maybe even a year, at some point in time, if the market is continuing on its trajectory, then it's going to end up going up to 171 per barrel as we end up taking a look at this. So you look at the weekly. Also, we go back and take a look at this. We do have a counter trend line break, and we have a retest. Remember, anytime that there's a breakout, typically there end up being a retest, and the market is in the buy zone. Once again, there's given us a lot of stuff to be able to take a look at and kind of explain that this market is going to end up moving up to the upside rather than pushing back down to the downside based off of everything that is happening. So the weekly is to the upside. If we take a look at this from an overall daily perspective, get off the weekly, let's go to the daily. If we take a look at this from a daily perspective, the market end up doing this ABCD swing from this new trend right here. We got, nope, let's do this over again. We end up going A to B, fell all the way down to the 8-6 retracement, and then after that has slowly started to push back up and kind of moving up to this area. The D extension is expected to be at 136 towards a short-term time frame to the upside. The only thing that's a little bit different is that this market is in a no trade zone overall, and if you look at it, there has been some slight consolidation that has been showing over the course of the last few weeks, right around this area right here. So the natural support, if we've been just taking a look at this overall, natural support has been right around $95 a barrel, and the resistance has been right around 115 a barrel. So $95. I'll tell you why I use whole numbers. Well, I'll tell you why I use whole numbers in general, but whole numbers are very easy to be able to take a look at when it comes down to overall positions. So makes it kind of easier to be able to place this in as well. Okay, so there goes our support, there goes our resistance. Basically, the midway point of this would probably end up being right around 105, and we can see that the market has been popping from that area. Not necessarily a pivot, it just means that it's in the middle of that support and resistance area, and that's the reason why I have it in blue. All right, so with that being said, with this market being in consolidation, there's two rules. You buy support, sell a resistance. Everywhere else does not matter. You can either do two different things. You can wait till the market gets to the halfway point, in which it did a couple of days ago, and you can look at being able to hedge based off of that overall break, and which means that you're just trying to find a direction when it ends up breaking out. Or you can wait until it breaks out and be able to see when the market, and once the market ends up breaking out, then after that you can be able to trade it knowing what the direction actually is. Totally up to you about what you end up doing when it comes down to consolidated moves. But to me, going back to what I end up saying, I believe that the market is pushing up to the upside from a weekly and a daily perspective. I do expect that this market is going to end up making a move, but because it is, in my mind, in a little bit of consolidation overall, kind of makes it hard to be able to go all in on an overall trade. But what I will look at is that if we go into a 2-hour type of move, can we be able to find a 2-hour low based off of a retracement, and then after that look at being able to get in? So here's my game plan when it comes down to this. One, I'm going to wait until we end up getting a fractal high. I want this market to be able to retrace. I do not expect that it's going to retrace back down to 105 a barrel because it's already done did that, and it's already done found that to be support right there. But I do expect that this market may end up falling back down to possibly maybe the 108 area, somewhere around there. If you look at it, we can see that this is being a little bit of a resistance, a past resistance, and can turn into a future support. And then after that, start to see this market start to push up from there. So that's my overall game plan when it comes down to that move. Just seeing if the market's going to end up making some type of retracement, and then after that, starting to push back up before being able to do anything else from there. So oil, I am interested in being able to buy. Obviously, if you end up buying inside of this consolidation zone, that means that, quite frankly, your stop loss has to be below the lowest swing low that you end up having off of this, and you got to be patient because it could get up to 115 and reject, or if you want to be very persistent on what you end up doing, you can just wait till this market breaks out of consolidation, and then after that, make a move from there. Totally up to you. Me personally, I'm just going to see how this kind of plays out before actually being able to make a strong decision on if I'm going to end up making a move off of it. All right, so there we go. Oil, I believe, is going up to the upside, but I do see that daily consolidation is starting to be able to show. So I'm not going to end up making a move off of that yet. Take a look at gold. Gold has been falling to the downside and ended up breaking out of that consolidation and started moving more into the downside. Remember, we were projecting this one to be able to go up to 2,000 if it was going to end up staying within that overall move. And we also end up saying that if it had a downside move, it could fall all the way down to 1780 before the market started to be able to make some type of retracement. And if you notice, that market has been pushing down to that 1780 position, which means that the 786 retracement from a long-term move to the upside is still in play. Now, that's a lot of stuff to be able to show. And once again, I'm going to clear this chart off, and I'm going to end up showing that in general once again, and kind of provide a little bit more clarity on what I'm actually saying. All right, so gold, obviously showing this all the way through. Let me get off these fractals. Well, actually keep the fractals in for a second. We take a look at what ended up happening based off of this low. We end up having a strong consolidation area before it started to pop up to the upside. Let's see, go down right there. The last fractal low that was very important ended up being right here back in February 2016. Okay, won't be able to use that one. Let's take a look at this one. Probably won't be able to use that one. Nope. Let's go right here. There we go. Perfect. All right. So currently, right now, this market has went to 1, 2, 3, 4, 5, 6 different Fibonacci swings to the upside. And currently, right now, the market has fell all the way down to the 8.6 to 17.7, the 17.17, or even lower than that, which I'll base off this fractal low, which means that at some point in time, if the market keeps on pushing up to the upside and without breaking the A, it's going to end up going up to 21, basically 2150 for the overall move. So I am still going to end up saying that this market long term is towards the upside, but clearly we can see that the market is pushing to the downside overall. So because we don't have a fractal low, because we don't have a fractal. Well, we do have a fractal low, but because we do not have a U-turn based off of this overall area right here, there's really not a great area to be able to say where I would get in for us being able to buy. So I want to look at where this market is going to end up falling for shorts once again, and then after that, that'll kind of let me know and try to see if we're going to end up having some type of U-turn that may end up potentially happening overall. Now, keep this in mind. We just went through the United States dollar index, and we end up talking about how the United States dollar index is going to end up showing signs that it possibly could start to be able to U-turn and go to the downside. Well, how does that affect gold? Well, gold has a secondary crossover with United States dollar. If the United States dollar starts to turn around and start to go down as a whole with the United States dollar index, then that means that gold is going to end up getting stronger. You'll start to see that U-turn to the upside, especially if the Japanese yen or the Australian dollar starts to get stronger as well. And so by being able to tie those correlations in, you can kind of be able to get a jump on US yen, Australian dollar, United States dollar, and most United States dollar pairs when it comes down to this retracement that may end up happening. Now, retracement trades can be tricky because the United States dollar can get strength overall very quickly based off of that movement. But there is opportunity of being able to see that if the United States dollar start to falter and start to go down and lose value when it comes down to the currency, that you will see other things start to get a little bit stronger. Okay, so keep that in mind as we go through. And type in a wire, yes, if that makes sense overall from that explanation. But this was the high price of what we end up looking at, and this is where this is where I end up getting that fib, where we end up talking about the downside movement overall, where the D extension was at 1786 for the downside move. All right, so here goes your A, there goes your B. The market went all the way up to the 618, which means that the D extension is expected to end off at 1786, which means that you got about 30 points left of overall movement that you can be able to get to based off of this push zone that is down here based off of that movement. Now, this is a scalping play. This is nothing more than a scalping play, and because this market has been falling down over the course of the last 20 days, this market could U-turn very quickly. So for people that are getting into this is a very risky trade if you wanted to be able to make that move, but always got to be able to show it overall for it being able to have people make an informed decision on what they want to be able to do. Take a look at it from a 2-hour perspective, and let's see what's happening from a 2-hour perspective based off of this fractal. And that kind of gives you a little bit more of a cleaner direction when it comes down to scalping this to the downside if you are interested. So there goes your field. We know that the daily D extension is at 17. Go back to the daily real quick. Daily D extension is expected to be finished at 1807. Hold on. Am I looking at that right? Let's try that one more time. Okay. Daily D extension is expected to end off at, I had 1786. No, I had 1786. Let's try that one more time. Here we go. D extension is expected to end off at 1786. You look at it from a 2-hour perspective and take a look at what the 2-hour fields are basically telling you based off of this last fractal. They end up happening right here, in which we end up showing that could go all the way to 1749, which kind of matches up with that 1786 area. This means that it could fall down a little bit lower. We look at the retracement that this last field has shown based off of 2 hours. It did not have a deep retracement, which means that it could fall down and complete once again a 80-20 rule. Once again, that 80-20 rule will mean that it will end up basically having a little bit of support that could happen at 1783. 1783 and 1786 are very close to each other, so I do expect that more than likely you'll probably end up seeing some people start to be able to make moves right around the 1786 to 1783 area for us being able to buy. Now, once again, that's speculation, like always, but that's kind of rules based more than anything else. So wouldn't surprise me if the market continues to fall down to this area. And because it falls down to that area, it's going to end up being one of those areas where I would be completely interested in being able to see how the market is going to end up moving and if it's going to end up popping up in that area. Doesn't necessarily mean that I'm going to end up pulling the trigger on the trade. It just means that I have to be aware once it ends up falling down to that area if I'm going to look at being able to buy based off of that. So Tuesday is going to be very important to be able to see what Jerome Powell ends up saying, because that may end up being where this fall area may end up pushing us to for selling. Then after that, looking at being able to buy when it comes down to that. So making a note on this one, and that'll allow me to be able to remember. 15. Daily D extension and 80. 1786. Daily D extension 1783. Two hour. It's a 2 hour 127. So there we go. That is gold and being able to take a look at that. So once again, if you are interested in being able to do anything, for this one, and you are interested in selling, look for a high price to be able to scalp, see what you can be able to get off of that. I would say stop doing all your trading once the market gets past 17. Once the market gets past 1790, um, that leaves you about 20 points for us being able to do that. If the risk reward factor makes a lot of sense for you to be able to make a trade like that, then look to be able to do it. If it doesn't, then just wait to be able to see if this market is going to pop up to the upside and be able to go from there. All right. So with that being said, let's talk real quick. United States dollar index is bullish on the weekly, has completed a D extension, has not had a fractal high to be able to make a U-turn. We take a look at what's happening with oil. Oil's in a position to where it's starting to push back up, and we possibly could see that the market could go up again when it comes down to being able to break that 130 per barrel and being able to do that over the course of the next 6 to 8 weeks, because we can see that this market is starting to push up a little bit more. Take a look at what's happening with gold. We see that gold has been pushing over to the downside, but if you go back to what's happening with the United States dollar index, you could possibly see that may end up being a potential U-turn that may end up happening in the near future once the extension is completed as well. Doesn't mean that once it ends up hitting 1783 that the market's just going to automatically bounce. It just means that you could start to see more people start to get in when it comes down to that movement. Once again, typing a wire, yes, that makes sense as we go through and be able to take a look at that, but something that I am paying attention to. We end up going from there. Hello, I'm JP from Newcastle, South Africa. What's going on? Hope everything's going well with you. If there's a pair that you would like for me to be able to take a look at before we get out of here, don't hesitate to be able to place that in. I am going to end up taking a look at Bitcoin real quick to see what's happening with that. I didn't get a chance to be able to get into it when the market fell down to 26, and that kind of sucks. But I want to see how this market starts to react a little bit more, and then after that, we'll start to be able to make a decision off of that. So let's see. I've been clearing the chart on everything, so I'm going to clear the chart on this one as well. So let's talk a little bit. First off, if we're looking at this from a weekly perspective, we can see that this market has found a natural support. And what that natural support is, you take a look at this actual low. The low is 29,313. This low was 28,000. This low right here ended up getting all the way down to 26,000. But it's basically, you've seen a lot of people basically start to be able to buy it right around that 29,000 area, and that's clearly been a support. It's been somewhere around there. So I'm going to use that as a notification of, okay, if this market breaks past 29 and stays past 29, then it's going to end up being a lot of trouble for Bitcoin. Okay, so let me put this up real quick and kind of go from there. Let's see. 5 here. So I'm just going to say 29,000 just for the sake of being able to do it, because you know me, I like round numbers. All right, so 29,000 has been a support. If we look at the resistance has been right around that $65,000 area, or it has basically peaked out in that area. So let's call that as resistance for right now, okay? And that's where we're at when it comes down to this movement. Now, with that being said, you look at the stochastic and take it for what it's worth, because the stochastic, when it comes down to cryptocurrency, can be a little bit tricky when it comes down to that. But look at it, we're at 19%, so you're really getting to a point to where you start seeing that this market could start to be able to push back up. And we went through a good amount of time where this market has been pushing over to the downside over the course of the last 8 weeks for its overall movement. So it wouldn't be surprising if we end up seeing a big blow off with the market starting to push up. That includes seeing Terra all the way down less than $1, and then after that started being able to make a U-turn as well. All right, so that's your weekly. Let's see from a field perspective where this market could potentially go. The D extension is at 24,799. So the D extension has not been completed yet for a retracement move yet. Hold on. Did I pick the right one? Yeah. All right, so market has not completed the extension to the downside as of yet. Yeah. For some people that end up getting in the terror right after they end up falling down, I've seen a lot of my colleagues that have been eating off of that move. I was just not one of them. Me personally, I don't trade cryptocurrency all that much. I like being able to get into some and just kind of stay with them a little bit more. But maybe I might end up changing my mind off of that. But let's say 29,800 is the extension. So let's put that right there. Change that to a different color. Okay, so that's what we know right there, and this is our daily C right here. All right, so take a look at this from a daily perspective, see how far this thing's going to end up going. So there goes your A, there goes your B. The market completed the D extension from the daily right here. You can see what that number was. Come on, come on, come on. Let me see what the number actually was. Okay, never mind. I just put a line by it. It was right around 31,000. Okay, so that being said, this is considered to be your R5 move as well. So when the market ends up making that retracement, it has to be able to push back up for us being able to have a little bit of a blow off going back up to the upside. We can see that the daily is in the buy zone, which means that any buys that you end up catching right around this point, as we notice that Bitcoin is over 31,000 as we speak right now, would be a pretty good move for us being able to catch a little bit of this reversal as it's starting to be able to catch, as it's starting to go up to the upside. Now, with that being said, talk trend lines real quick. Here goes your outer trend line. Let's start off with the outer. There goes your outer trend line right there. Here's your inner trend line right here. And let's go to your innermost trend line. Innermost trend line is right here, which has been broken to the upside. So here's the rule. If you're not familiar with trend lines, you're not familiar with the way that it's basically been moving. Anytime that the market ends up breaking a outer trend line, it will end up gravitating towards a inner trend line. Anytime that the market moves breaks a innermost trend line, then it will gravitate toward the inner trend line, which will eventually gravitate to the outer trend line. Okay, so what I am looking at is that I will look at being able to buy. It may not necessarily be one of those things where I'm placing in my life savings on being able to do it, but I would be interested in being able to buy and be able to see if we can be able to get back up to at least 36,000 before being able to take profit out. Now, the $36,000 area is the 382, but also is where the inner trend line actually is. So that will kind of give you one of those things to where you'll see that the market breaks the inner trend line, and then after that, we'll see if the market is going to end up rejecting off of this or continue to move toward the outer trend line based off of that movement. Now, one other thing that could affect this, once again, is what's happening with the United States dollar index, because once again, this is a crossover with the United States dollar index. And it kind of goes back to what I ended up saying with gold as well. United States dollar index has not had a U-turn yet. Because it has not had a U-turn, that's the reason why gold has been falling. In which we know that the weekly D extension has been hit on the United States dollar index, which means that if we do start to see a retracement, we will see that Bitcoin will end up going up eventually. We will see that gold will end up going up eventually. We will see that what's happening with indexes will also end up going up as well, because they have been making moves to the downside as well when it comes down to that push. Okay, so just keep that in mind. There goes your correlations when it comes down to being able to make a trade and being able to understand what's going on after all. From a 2-hour perspective, clearly what we can be able to see is that there has been a ABCD swing that has been forming. The question is, has it completed yet? That answer is no, but it's above the B, which means that the first D extension will be at 33,857. So you are looking at being able to get in on a buy when it comes down to this movement. Whether if you buy it now and you wait for a 15-minute retracement or whatever may end up being the case, I do expect that the market will get up to at least 33,857 if this market continues to push up to the upside. Okay, so there you go. When it comes down to that, we see that the 15-minute has blown off and has pushed up towards this. There we go, that innermost trend line. The question is it going to reject or is it going to break? And then after that, be able to make a move from there. So not going to make a move until I end up seeing that either this market does this, where it ends up breaking out and then doing a retracement, or if it ends up giving me a lower price to be able to get in. And then after that, being able to catch it to see if it does do that move eventually. Okay, so there you go. Bitcoin, I am going to end up looking at being able to buy. This will end up being more of a it will end up being one of those plays where I'm not going to use all of my money, but I am going to use some to be able to get in and look at being able to get out at the D extension from there. Yep. Nice BTC analysis. Thanks. I got in long at 29,460. Well, you should have messaged me. Yeah, you should have messaged me when it came down to that. It's my first time actually doing a full dive on Bitcoin in about, I want to say about 3 weeks, and being able to go from there. Now, keep in mind, long-term weekly D extension has not been hit yet, so that's one of those things. But I do expect, because United States dollar has to make a retracement, that you're going to see that people will get into Bitcoin at some point. All right, Ethereum. Let's take a look at that real quick. Okay, so same deal. And both of these charts basically mirror each other because everything kind of mirrors Bitcoin anyway. All right, so there goes your supports. This support has been at, I got 1725. I can go with that. The resistance has been not like a major resistance, but I am going to talk about the last time that it peaked. It says 43.78. Let's go with 4,400 as one of the high points. Okay, we can start once again. We can see people starting to buy this off once it ended up getting up to 1725, which once again one of those things to where we look at it. The extension has not been completed yet. Once again, just like what's happening with Bitcoin, there's the extension that's expected to be completed at 956 if it keeps on moving to the downside based off the weekly. Keep in mind that we got strong support at 1725, so if it does go like that, then I think there may be a mass exodus of cryptocurrency if it does happen like that. I don't believe that it will, based off of what I'm looking at with the United States dollar index. But there we go. So had a little bit of rejection up to 127. The 127 is just one of those spots where people look at being able to get in or being able to find support or resistance based off of the movement. And from there, that allows us to be able to see what's happening from a daily perspective. So there you go. Let's see. Let's go to the daily. On this daily swing, there's a downside field that could go up to 720. Once again, I don't think that's going to happen either. But you got to be able to show it at least. So there goes your A, there goes your B, there goes your C. Weekly D extension, if it keeps on falling down, could go all the way down to there. But the weekly is a little bit more important than the daily based off of this. But going and taking a look at this, here goes our trend lines. Here goes your outer trend line. Here's your inner trend line. And here's your innermost trend line. So innermost trend line is doing the same thing that is happening with Bitcoin. It's basically touching it right now. We'll see if this market is going to end up breaking out and actually grabbing from the innermost to the actual inner trend line as a whole. The 2 hour will probably end up being a little bit more clean on this one because remember, Ethereum moves kind of after the fact of what happens with Bitcoin. So I think that you'll probably get a bigger push or a faster move from Ethereum than what you would with Bitcoin. Now, Bitcoin starts to move, it's going to run because it is what it is. It's the grandfather of everything. But I think Ethereum will end up making a solid push up to possibly right around that 2,300 area before really starting to find any type of resistance before it's any move. So taking a look at this from a 2 hour perspective, let's see what that looks like. From 2 hour perspective, the extension is 2393. Good night. Okay, so 2393 will be the first move. If it continues to keep on moving, the supports that I see from here, past support equals future resistance, will be at right around 2750. 2750 looks like a good midpoint area, guaranteed. almost guaranteed. Let's see, 2 hour. Nope. Take a look at the daily. Okay. Just one of those natural support areas. You see the market end up being, see that the market was support, a little bit of resistance right there. So this could be a pivot. Wasn't necessarily a pivot around that area, but there we go. Get that out the way. Let's see. So 2 hour. If I'm looking at being able to make a trade, once again, my trade will end up being up to the upside, being to the downside. The market retrace all the way down to the 5.0. The extension from this one ended up being at 23.93. If I'm looking at being able to place my stop loss anywhere, if you're doing this based off of a future or anything else like that, I would place it below this overall swing low. You want to be very protective of it. You could place it below 1763, in which kind of hard to be able to make a move like that, especially when it comes down to equity management wise. So stop loss on this one will have to be below the swing low, which is at 1948. So you say 1940, somewhere around there will end up being a pretty good stop loss. Take profit on that will end up being at 23.92. From this standpoint, you're looking at almost 2,700 points and risking 1,800. Not a great risk versus reward, but you do have it for the overall look to be able to get in. Okay, so same deal. But I would look at 15 minutes because the market is going to end up opening up at 5. You'll probably see a little bit more movement from there. And it's starting to show that this market has an area where it likes to bounce a little bit. Use these trend lines as an example of where this market could potentially fall to. I'm going to place this in purple so everybody can be able to see it. If this market falls all the way down to this area and then bounces and it holds this as a natural support, then that's where I look at being able to get in. That's not like an actual number. That would be the area where I would just kind of pay attention to. So right around 2078, 2080, possibly end up being one of those areas where I'll look at being able to get in for us being able to buy. And then after that, obviously look at being able to ride it all the way up to at least 2,300 from there. Okay, so there goes my analysis on that. If you have any questions or anything else like that, if it makes sense from that one, type in a wire yes. Overall, when it comes down to that, take a look at the indexes real quick. How much time? I've been doing this for almost an hour. Typically, we only do this 30 minutes. Let's see. United States dollar index. What do we have? Let's see. Those that are familiar with me know that I love indexes. Absolutely love indexes. My automation systems and everything else are built off indexes. So we'll get into this real quick. Okay, from a weekly perspective, kind of hard to create a outer trend line off of this one, but let's go. Let's do this. Here goes your outer trend line. Here is your inner trend line that end up getting cut. The question is, do I think that it'll fall all the way down there? No, I don't think that. So we'll look at natural supports. So the easiest natural support will end up being right here. Obviously, the next natural support will end up being right here. And obviously, our biggest resistance has been up there. Okay, so with that being said, we can look at, there's a few things that we end up taking a look at. And one, because we have bottom profile on TradingView, I absolutely love it. We can see that basically we're in that low area of the low area of volume for people being able to get in, for being able to buy, sell, anything else like that. With the highest point basically being at 35,000. Now from there, we've seen a lot of people. We've seen this market basically be in free fall, and the reason why it's been in free fall is because that there's not a lot of people that are interested in being able to buy around this area, because there's no natural U-turn nor no catalyst that's been to say that the Dow Jones and all the pairs that are in the Dow Jones are going to end up pushing up to the upside as of right now. So that's why Tuesday's information from Jerome Powell is probably going to end up being very important, to be able to see what's going to end up happening off of that. If I'm looking at this and saying what would be the natural movement from this market, it will probably end up being this: push up, fall down to support. It will probably stagnate around support. And if the market is bullish, then you'll start to see that it'll slowly start to gravitate towards 37,000, try to break it, turn it into a new support, and then after that, push up to new levels that we've never seen before. Okay. Naturally, that will be the natural movement that would happen. Now, keep this in mind. Everything with trading, there's really nothing natural that ends up happening, right? The market does what it wants, when it wants, and how it wants, and it'll always be right. But take a look at Fibs and let's see what's happening and see where this market could potentially go. So there goes your fractal high, there goes your fractal low. If the D extension is expected to be hit at 30,758. Currently, right now, if we look at what that retracement actually ended up being, make sure I get this right. Here and there. So 30,850. There goes your A, there goes your B. C was up here. The extension is expected to be down there. We end up having that large move to the downside, but we end up having people start to buy it off at the end of the week. But eventually, I do expect that this market will continue to at least complete this D extension at 30,843 before starting to being able to make a move up to the upside. And I'll almost end up saying that this market could fall all the way down to 29,400 before really starting to be able to make a move in any direction. Let's say 29.5. Once again, go back to whole numbers and half numbers. All right, so 29.5 is one of those areas where I just place an alert on, and this would be past resistance turn future support weekly 29.5. Okay, so with that being said, we have that from a weekly perspective. The weekly is pointing to the downside. We can see that buyers end up starting to be able to take, being able to take profit off of it, but the D extension has not been completed as of yet. So clearly that means that the move is to the downside. But we look at the daily will start pushing up to the upside, which means that there's no time frame alignment. And because we don't have any time frame alignment, that means that I would not be a player in being able to make the trade on this one manually for a long-term move as of yet, until both of them are trading in the same direction once again. The reason why I do that is because there's so many different pairs that you can be able to trade that do have time frame alignment, which makes it kind of a simpler trade to be able to get in when it comes down to risk reward factors. In this case, that's not the case. If we got into it last week and ended up saying, hey, we were trying to sell it, then it would have been a perfect marriage, because you had the weekly trading to the downside and the daily trading to the downside, both of them going into a push zone, which made it very easy to be able to get in. In this case, we don't have that. We have a weekly trade to the downside. We see that the daily is starting to push up. So as long as that starts to be the same, as long as that's not the same, then that's no trade to be able to get into. Okay, so if we look at daily fibs, there goes your C, there goes your A, there goes your B. Market fell all the way up to the 8.6 and completed at 31.446. Once again, that's the reason why the market ended up popping up, because the daily D extension has been completed. And that's the reason why you had that long wick. All I swear, once you end up understanding Fibonacci, it makes it a little bit easier to be able to understand the context of why stuff actually ends up happening. Um, but with that being said, here is your outer trend line from the daily. Here is your inner trend line from the daily. The market has not popped up to the upside based off of those movements, and because of that, once again, this is something that I will stay away from. Okay, so I believe that there will be some type of movement to the upside. I think they will kind of match up with what you end up seeing with gold and Bitcoin and Ethereum, and the indexes going up while the United States dollar goes down. Tuesday will kind of solidify it if there's some negative news that will end up pushing it to the downside. That's my dog keeps on barking for me to be able to take him outside. And then after that, you'll start to see. Then after that, I think we're starting to get a little bit more clarity about what's happening. Type in a wire, yes, if that makes sense about US 30 before we end up doing that. Last pair today will be Nas 100. Nas 100 from a weekly perspective. I'm going to keep this stuff on here because if I don't, then I'm going to forget why I had this in the first place. We talked about the downside movement going all the way down to 12,337. If you end up making profit off of that, congratulations. We end up talking about that for a while. That also matched up with the 618 of the long-term movement to the upside. So the weekly is still pointing to the downside, but it has hit the sweet spot for the long-term movement, which is right here to the upside. There goes your 618, there goes your 786 for the overall movement. So if this market falls down to 11,047, then definitely look at possibly being able to take a long position and just be able to just ride it out. You can ride it out. This may be something that could be able to and be a trade that you can stay into for a very long term based off of that movement. But with that being said, that's the weekly field that we're finally in the sweet spot in. You take a look at the daily. We can see that the daily end up having this morning star movement that we end up seeing based off of this. That could show that over the course of the next 7 to 11 days, we may end up seeing some type of upside movement overall. Because we end up having this bearish movement, we had a decision candlestick, we had an indecision candlestick, and then after that, we had a decision candlestick going the opposite direction. Typically, what happens on a morning star and most U-turn candlestick movements, you end up seeing that the next candle will end up basically testing the overall movement, which means that we may end up seeing it start to push to the downside. But as long as it does not break this overall low right here, then you will start to see that this market will eventually start to move up to the upside. Okay, so that's candlestick analysis for you, being able to take a look at that as well. So with that being said, if we go based off of the weekly's to the downside. We go to the daily's to the upside. Time frame alignment does not match. That means that I'm not interested in being able to take a trade until time frame alignment does match overall. But for people that are looking at being able to scalp, people not looking at being able to get short-term movements or anything else like that, my odds based off of this will probably end up saying that this market would push up to the upside short-term before being able to fall down eventually again and complete the extension. Now, the question is, would I be interested in putting a lot of money into this overall movement based off of what I just said because of time frame alignment? The answer would be no. I actually like cryptocurrency a little bit more based off of what I'm looking at compared to what I'm looking at with the indexes. So hopefully that makes any sense. With that being said, that is my analysis for today when it comes down to all of the pairs that we end up taking a look at. And because nobody didn't have a pair that they was interested in being able to talk about, this brings me to a point where I can be able to talk about what I end up doing for my overall company. Here at Carter Capital, what I end up doing is I teach people how to be able to buy and sell inside of the market, show people that I end up having automation systems that allow you to be able to trade the market while you end up working, sleeping, doing anything else like that. That is with United States 30. US 30. That's with DAX. That's with NAS 100, and all of the indices. Once again, I end up saying I love indices, so I do that with the FX Striker, and I also end up doing that with the swing trading EA. Obviously, we have other EA systems that work with Forex pairs and stuff like that. But if you're interested in being able to learn how to manually trade the way that I end up doing, or our team ends up doing, you can go to cartercowcapital.com/start here. Fill out this information. Once you end up filling out this information, I will contact you personally about being able to get you set up for one of the free webinars that we end up having. We end up hosting boot camps every Monday through Friday, and then after that, we end up having our master classes that we end up doing, which is a 2-month session, basically 2 times out of the week. And also, you can be able to decide from one of the automation systems that we end up choosing from. But like always, I do appreciate each and every person that ends up staying on for the almost hour that we end up doing this for. And once again, like I ended up saying before, please, thank you for everyone that has been sending messages and everything else like that. I know we haven't necessarily done this in a while, but promise you we end up getting back into it. You'll see my face a lot more often. Like always, plan your trade your plan. Everyone, I'll see y'all on the next one. Take it easy.